Hello everybody, this is Lara with your weekly video for the S&P 500 for the week ending Friday 28th of October 2022. I still expect the bounce is most likely incomplete. I'll expect resistance to be found possibly next week, either at 4006.81 or, if it's deeper than that, the upper edge of the black Elliott channel on the weekly and daily charts. I still expect this is a counter trend movement, another bounce within the bear market. When it's over, I'll expect new lows. The structure of the bear market is still incomplete. I've got two ways of seeing primary 2. The first and most likely is as a zigzag, which is labelled A, B, C. An intermediate C with minor 1 complete, minor 2 to continue higher next week, and then it needs 3, 4, 5. I do have an alternate which considers the possibility that primary 2 is over at this low. It has a very low probability. It requires a new high above 4325.28 for confidence, and a breach of this channel for confidence. The final target for primary 2 remains the same at 3144. Intermediate C would reach equality in length with intermediate A. Primary 2 may not move beyond the start of primary 1 below 2191.86. Let's take a look at the daily chart, where this high here for intermediate wave B is this point here. From this high to this low, this downward movement fits beautifully as a 5-wave impulse. Minute 1, minute 2 an expanded flat, minute 3, minute 4 a zigzag, and minute 5 short. Both 1 and 3 are extended, and it all fitted really well within a channel. So after a 5 down, we should be expecting a 3 up. Minor wave 2 looks most likely to be subdividing as a zigzag. A, B, C, and C is extending. I will expect minor 2 to most likely end about the 0.618 Fibonacci ratio of minor wave 1 at 4006.81. If it doesn't end there, or if it takes long enough, then it may end about resistance at the upper edge of this channel. This channel is copied over from the weekly chart. Draw best fit channel around minor wave 2. I've drawn it from this low to this low and pushed a parallel copy up to sit across these highs. Look for resistance at the upper edge. It may end about there, and support about the lower edge along the way up. When this lower edge of this channel is breached by a full daily candlestick below and not touching this trend line, that may be an indication that the bounce may be over, and then a third wave down for minor 3 may then be in its early stages. At the daily chart level, this wave count considers primary 2 could be a double zigzag. This is also possible. The target on my main wave count 4006 for this one may not be high enough. This one expects resistance about the upper edge of that Elliott channel. This channel is drawn in the same way on daily and weekly charts. So this wave count is essentially the same in that it expects the bounce to continue and then the bear market to resume, but the bounce expected resistance may be a little bit higher for this one. And when the next move down is underway, then the structure may be a little bit different. At the daily chart level, this is a bullish alternate, considering the possibility the bear market was over back down here at the last low. This does not have enough support from classic technical analysis, and so it has a lower probability. If the bear market is over, though, a reasonable target for primary 3 would be for it to reach 1.618, the length of primary 1, at 7742. When it's over, minor 1 would then be followed by minor 2, and minor 2 may not move beyond the start of 1 below 3491.58. Okay, classic analysis now. This week has closed quite strongly. A close very close to highs for the week and push from volume suggests we may see more upward movement next week. Look out for next resistance about 3950. On balance, volume has a weak range. There's no signal. ADX is declining this week at the weekly chart level. No clear trend. RSI money flow, both neutral. Stochastics returning to neutral, and ATR essentially flattening off now as prices moved down to this low and started to move higher. At the daily chart level, in this last piece of downward movement here, there was a 90% down day here, and then followed a few sessions later by an 80% up day and then a 90% up day. But this 90% up day comes 7 sessions after the 90% down day. It's not close enough to be considered that nice pairing that you get around a sustainable low, a V-bottom, that indicates the 180-degree shift from bearish to bullish. Lowry's analysis warned, and I linked back to a white paper in comments for members in last week's analysis. If you want me to do that again, I'll put another link in comments underneath this analysis this week. But Lowry's linked to a white paper where they warn that there are 5 things, at least commonly found at sustainable lows, and you'll find at least 4 of those 5 things very common around sustainable lows. And this low only has 2 of those 5 things, and one of them is questionable. So the probability of this low being sustainable, according to Lowry's data, is not very high at all. Continuing 80% up days, a 90% up day here, 80% up day here, 80% up day here, may be just the continuation of normal volatility associated with bear markets. We see these 80 and 90% up days within counter trend movements within ongoing bear markets. So their presence here alone does not mean that the bear market has to be over down here. It didn't mean that back here. It may be the same case again here. No signal from on-balance volume at the daily chart level. ADX declining at the daily chart level, no clear trend at either time frame. RSI, money flow, both neutral. Stochastics overbought, so for the very short term conditions are overbought. Look out for next resistance 3950, and above that about 4000. The moving average situation still overall bearish. Let's look at breadth and volatility. This week, the AD line and price have both moved higher. There's no new divergence here. This previous bearish divergence has been resolved. At the daily chart level, though, there is new bearish divergence. Price is moving higher on a closing basis. The AD line so far has failed to make corresponding highs. This rise in price does not come with a normal support from rising breadth. And so this upward movement looks most likely to be a counter trend movement, a bounce within an ongoing bear market. There's enough weakness there to say that that's the most likely scenario at this time. Between the NASDAQ AD line and price, there is still over a decade of bearish divergence between the NASDAQ AD line and price. This is the March 2009 low. NASDAQ AD line has made strong new lows below that, but price has not. But it's done that before, and that didn't lead to a strong bear market. As I say every week, when this kind of bearish divergence between the NASDAQ AD line and the NYSE All Issues AD line is in agreement, then my analysis would get very bearish. But only one of them is this bearish, not both. They both have to be very bearish before I expect that grand supercycle wave 1 could be over. At the weekly chart level, both of them moving higher this week. No new short-term divergence. This previous short-term bearish divergence now resolved by a new low from price, but there's still bearish divergence back to March 2020. The NASDAQ AD line is making new lows below March 2020, but the S&P 500 has not. But again, the NYSE All Issues AD line has not got the same bearish divergence. They're not in agreement, so I'm not expecting that the S&P 500 must make a new price low below March 2020. If both these AD lines were in agreement, then my analysis would be more bearish. They are not, and so it is not. This week, both price and inverted VIX moved higher. No new divergence. VIX and VVIX are moving lower. VVIX has made a short-term swing low. VIX has not, with volatility of VIX depressed. This is bullish for price. And we see that same divergence here at the daily chart level. This is bullish for price. Both price and inverted VIX moving higher on Friday, both making short-term swing highs. No new divergence. That's all from me this week with your S&P analysis. I hope everyone's looking forward to a fantastic weekend.